Paper hands are folding every day as the short volume ratio continues to increase for AMC. I got a great video for you today. Let's jump right into it. This is from fintel.io about AMC short volume, and there is a change here. So notably, as of April 9th, there was only about 20 short volume ratio on the day, and on Monday it actually increased to almost 29% here, so it's getting close to 30% short volume ratio on the day for Monday. And now how you get that number is dividing this number by this number. It's going to give you 30%. So it's the total shares volume for the day, 50 million, and the shorted shares for the day is 14 million. It's going to be about 30%. The difference here is it's only been this high once last week. Besides that, it's been hovering around 20 for quite some time, and that's actually up over the past couple weeks as well. So to further confirm this data here, unfortunately this is as accurate as we're going to get right now, because this from 331 is slightly outdated, but this is the most accurate report currently. So what we're looking at here is a 50% increase from the volume sold short. Okay, so from the middle of the month, the middle of March, 3/15, there's only 50 million shares sold short, AMC. And now for 3/31, we're looking at an increase 50% up to 74 million. So that's a substantial difference. The hedges aren't out of ammo. They're continuing to try and push this down over and over again. So this is our midterm chart. We're looking at the bigger picture here, staying focused on the end goals rather than the chop intraday. These smaller moves are shaking quite a few people out here. Be very careful with stop losses. So I'm going to be a little more conservative with this accumulation box, consolidation box. Move it down just slightly below to about here, where it is sitting right now. That respects the previous price action pretty well, with this wick coming through. Some of these other ones right here, and this wick right here. So this is the current support line right where it's sitting right now. $8.60, $8.50 roughly. If it breaks below that, it could see another push lower. And interestingly enough, you can't make this stuff up. Remember one of our original wedges here, this magic triangle back here, like so, have just highlighted. Well, if you look at the most critical point here where they join together, well, I'm going to put a horizontal line exactly in the middle there, and there is support here. What number is that? That's going to be at $7.77. It's really, that's the number. It's precisely there. That's Denwo's favorite number, just by coincidence, okay? There's a good chance we test that. I'm not convinced this is over just yet. It's too early for any kind of validation or confirmation on bullish reversal from this point. We haven't seen that just yet. It is within the consolidation box, however. So there is a pretty good chance it could bounce here at any point, guys. really now, any day, AMC is looking to find a bottom here because there's a strong area of support just beneath it here. So this is the short-term level that I'm watching just in case it breaks below here. $7.77 in the bearish scenario. For the bulls, we are hoping to see a bounce here from this level, from this point where the current price action is sitting. That should bring it back up to the top of this accumulation box, just about $10 psychological resistance. Okay, so that's the current short-term resistance right now. It's going to be that $10 point. And then keeping things on target, the next area above the last high is going to be this tight zone here, and that's between $15 and $16. So the next target is indeed $16 for the midterm. That's still a current relevant target. We can't forget about that target just because the price went on a correction after the shareholder vote announcement and the increase in shorting. So as a matter of fact, right here, March 15th, that's the beginning or the middle of the month of March, as I was showing on the short interest ratio, right? The middle of March, it was 50 million shares. And then the end of March, we're at 74 million. So that's this whole corrective phase here where the shorts were increasing. They're gonna keep trying. So if bears are unsuccessful to drop it lower from here, they will try again in the future. Patience is going to be key here, heading towards this $20 target in the long term for the future. Zooming into the day trading chart real quick, just to point out where the price closed on Monday. Daily candle closed right exactly at the support line. It's not a very strong support line per se, but it is a support line nonetheless, and may hold up here going into Tuesday. So we're gonna have to see how that develops. Now, if you're panicked here about a further drop in the share price, perhaps you're over leveraged. Perhaps you have a little too much on the line right now, right here, right now. This is still a buy box down here, just in case it does return that low. That's where bulls are looking to re-enter. They're also continuing to scoop up shares over and over on these dips. It's getting bought up pretty quickly and reversing to the upside every time it does dip. So there's still a decent chance to see a nice strong recovery right here. For GameStop, things are a little more rough, a little more risky, to be honest, and they have been for some time here. It's been trending down for weeks, ever since this $300 buy box, sell box. That's why I don't like labeling them as such. It's not the best terminology to be using for these boxes. Perhaps I'll begin to call this a bearish box in the future. So this is a bearish box, and ever since the price got rejected back through that box, it has indeed been trending down for quite some time. So, In the midterm and short term, it's looking to continue that pattern. Similar to AMC, unfortunately, I see no sign of an immediate change in the direction here. There's no reversal signal just yet. There's still an extreme amount of resistances right above where the price action is on the intraday. This descending channel, this horizontal resistance, and then above going forwards, there's even more. There's much more resistance right here between these orange dashed lines. Is a very strong area that poses a threat going forwards, even if it does move upwards from this point. So be careful about entering along too soon here on the bigger chart. The longer time frame charts are still pointing down, and it could happen very quick here, just like it did on Monday. This was a pretty big drop, so taking a measured move down from that area that was previously support, it's going to be down 20%, another 20% after it already did that just the other day. So if it does that once more, down 20% is going to put us exactly back into this support area, down towards $100. That is the next accumulation range. Perfect. Now, I forgot to point something out on the RSI for AMC. Hop back over to that really quick. Check this out on the RSI. I've been patiently waiting and attempting to identify any type of bullish or bearish divergence, and I'm not going to explain that too much right now. However, I will show you that I've been successful in identifying some bullish divergence here on the 2-hour chart for AMC. So now that this lows in, this lower lows here from this previous one back here, I'm looking at these two lows. Well, drawing a trend line from the bottoms is pointing down, sloping down. Now, doing the same for the RSI at those 2 points in time. It's back here and right here. Trend line from the bottoms is actually going to be sloping upwards. So as long as this finds support here on the RSI, this is valid and confirmed going forwards. It's not quite yet. It could break through here and dip just a little lower before a real strong reversal coming into the near future. But if this does indeed hold right there, that'll be a higher low on the RSI. When you put those two together, combine the two trend lines there, so the one sloping upwards on the RSI and the one sloping downwards on the actual chart, that's going to be bullish divergence. It's on a 2-hour chart here. It would be nicer if we could find it on the daily chart. However, it is not identifiable on the daily chart just yet. Something to point out with GME's RSI, while we're on the indicators, it is very low right now on the 1 hour. It is very oversold. That was a pretty big drop. Has bounced from there. However, it's pointing down right now. And I think there's a pretty good chance here that it is going to go lower first before returning back up to this normal area. So be careful here. This is not for sure going to bounce from this point right now. It looks like it could, but there's a good chance it's going to keep going down just a little lower one last time. Remember, it's very common for your emotions to get tested one last time before a big push higher. So, to conclude with GameStop, going back out to the daily chart now, we're going to remain focused on this giant magic wedge pattern. And look where the price used to be. We're analyzing a breakout up in this area. It never happened, so this is not relevant anymore. This is not an accurate projection. I'm going to have to move it down as time goes on here, the lower the price goes. So I'll leave it right about here at this area of confluence. So until this pattern does indeed show signs of a real reversal here and break out from this gigantic wedge, the chart remains bearish, heading lower into this bottom buy box area beneath $100. For NAKD, it's getting interesting. There's a lot of volume coming through here. Look at the volume spike down below on the chart. And this is on a 1 hour chart, so there's more volume coming through here than back here, where the price is actually higher. New traders are gonna make sense of that by trying to assume this is selling pressure volume. It may actually be people buying as well. Okay, volume works in both ways. It's not just selling here because it's red. There's also buyers stepping up there. I could potentially lower the support down to the bottom of this buy box area just to be a little more conservative. Like so. To be even more conservative, you could lower it once more beneath this gap. So that's the strong support right now on NAKD going forwards if it does continue to trend downwards. Similar to AMC, at any point this could start reversing and have a nice bounce. It's a little early for that right now. There's no strong signal here. So it's essentially catching the falling knife. That's what they call it when you're trying to enter a long on something that's dropping so substantially. And I just wanted to say that entering here, even though it's catching the falling knife, entering down in this area is a much safer and better play than entering where the price was just a short time ago. Similar to CTRM, it was quite a bit higher recently. And this chart is pretty unique here. There's some interesting things about it. It does have a lot lower. It could go to its buy box area. It's a little early as well. A lot of these assets are at extremely critical points right now. From the bullish perspective, they're at amazing entry prices. For the bears or paper hands, this is pretty intimidating, and they may be panic selling here, so do be aware of that. It's still risky either way for a lot of these assets. The main importance of being able to identify these areas is for the future. So we'll see a lot more pattern developments here as time goes on once it returns to either one of these boxes. And to put a trend line on this, you can indeed draw one down here like so. Now that the price has dipped all the way this low into the consolidation box, well, this trend line's valid now. There's at least 3 touch points there, so if I take this line, copy and paste it, make a parallel descending channel, it's gonna put us like so, about here. Now, some people are drawing this as a falling wedge. That is a possibility as well. And not only that, I can make another parallel channel from way back here. I'm going to be conservative with it and use these lows all the way down here. Like so. And note the confluence between these 2 corrective patterns right here. On falling wedge patterns like this, they frequently break out before the end of the pattern, so any time here we could see a push above this resistance, and that'll look good for the future. And to wrap things up, CCIV, the magic circle is not really played out too much yet. It has reflected some of these small spikes, and I have readjusted it here just slightly. So what I'm doing as the price goes out further and further from this circle, I'm simply going to be increasing the depth of this circle further and further away and see if it matches up with the price action. So there's a couple ways to draw this, and I'm placing it right here for now because it's in this high intensity zone. The pink is high intensity. I'm expecting a move soon on CCIV. And if it doesn't snap up from that circle, well, perhaps it's beginning to fall into this smaller pattern here. This little triangular shape of consolidation, a little bit of chop, and then a breakout. So still short-term to mid-term bullish on CCIV. And it has been getting somewhat oversold as well on the RSI. And I will be live tomorrow, Wednesday morning, 9 o'clock a.m. for pre-market analysis. Hope to see you there. Happy trading. Have a great day.